Assalamualaikum to our Madam Suhana. Today, I and my another two members would like to discuss about impact of gold price in Malaysia. Okay, gold is a precious metal with a serve of both financial and real asset. This is value gold in the society goes more than just economic, as it also treasure as a storage and display and culture. As we know, for a woman, it's very love about the gold. Gold is a precious metal that is valuable for the keeper. It has a long life and extreme durability. Gold can be melted and reconstructed to fit for multiple kind of use. Okay, I will discuss about objective. This study aims to find out what is the relationship between gold price and several factors that affect the price of gold, namely inflation rate, exchange rate, and crude oil price. This is because the price of gold show the rate of volatility of their price over the last few years, and this research will show the effect of inflation rate, crude oil price, and gold exchange rate in Malaysia. The specific objective is to examine the relationship between gold price and deterministic impact of inflation. Examine the relationship between gold price and impact of Malaysia exchange rate. After that, to examine the relationship between gold price and impact on Malaysia interest rate, and the relationship between gold price and impact of global economy. Okay, after that, I will discuss about factor affecting the price gold in Malaysia. First one in inflation. Inflation is an increase in the general price level. It's considered as one of the microeconomic problems since it can reduce the purchasing power of people. This is where people will think they can protect and improve their value of wealth by investing in stock, houses, and another asset, and also gold. Secondly is exchange rate. Okay, the US dollar exchange rate has significant influence on gold price. Before currency was introduced and adopted by the world, the gold standard is the monetary system in which a standard economic unit of account is based on a fixed quantity of gold. Gold is often used as a hedge against currency, as when dollar exchange value decrease, it takes more dollar to buy gold. With increased value of gold indicated that US dollar will influence gold price. Thirdly is interest rate. The real interest rate is known as the rate that is adjusted to remove the effect of inflation. This is to reflect the real cost to fund to the borrower and real yield to the lender. Therefore, real interest rate of an investment is calculated by subtracting of inflation from the nominal interest rate. According to real interest rate, in the US may lose some of their traditional strong influence over gold price. Okay, after that is crude oil. Crude oil has a fairly significant direct and indirect cost input to the production of gold. Higher oil price will translate into into higher gold price. It is argued that the price of gold and oil are related, while there is no apparent intuitive connection between what happened with oil and what happened with gold. A study conducted by Shafi'i and Topper found that crude oil price is significantly related to gold price. And lastly is the last effect is global economy. This is economic instability will also cause investors to try to earn their money. Gold is one of the popular place to invest and wait for the economic downturn and trade war. This is also causes the selling price of the gold to increase due to rising demand. This increase in demand is not limited to time of economic down. I just want to share with madam that what I see about the gold price, since I'm the people who very love gold, and I can see that the last time our PKP in 2020, the price of the gold is so increased. So after our cases of COVID decrease, the price of the gold starting decrease too, but step by step.
Okay, my name is Muhammad Nur Aizat bin Muhammad Nur. Let's move to our next topic, which is exchange rate, which MYR and USD. The USD dollar exchange rate has significant influence on gold price. Before currency was introduced and adopted by the world, a gold standard is the monetary system in which the standard economy unit of account is based on a fixed quantity of gold. Gold is often used as a hedge against currency, as when a dollar exchange value decreases, it takes more dollar to buy gold, which increase value of a gold indicate that the US dollar will influence gold price, as a gold price is generally dominate in a USD dollar. Thus, the exchange rate MYR per USD is used in order to observe the effect of influence of exchange rate in Malaysia on gold price of Malaysia. So it is found that gold prices are unstable because of fluctuation of currency, appearance and depreciation of US dollar have a stronger effect on the price of gold, and that a gold should not be considered as a store of value against the inflation anymore. Besides that, study on the relation of gold price and a various exchange rate through a vector error correction model VECM show that there are a long-term relationship between gold price and exchange rate of MYR plus USD, SGD plus USD, and THB plus USD. Gold price habitat positive relation which MYR and USD exchange rate. So for the overall exchange rate should exhibit a positive relationship which exchange rate as the value of exchange rate MYR USD increase. The currency of Malaysia ringgit depreciates. Therefore, investor and consumer in the market will switch to gold order in prevent the loss of value in their money. So let's move to another subtopic, which is interest rate. Interest rate is the real interest rate is known as the rate that is adjusted to remove the effect of inflation. This is to reflect the real cost of fund to the borrower and the real yield to the lender. Therefore, real interest rate of an investment is calculated by subtracting the inflation from the nominal interest rate. According to the real interest rate, in the US may lose some of their traditionally strong influence over gold price in the coming decade or so. As a inflation rate and physical demand in emerging markets are getting higher. In order to reap a better return, when their interest is high, investors will hold less gold and more financial interest-bearing assets. Investors tend to regard gold and bond as a complementary goods. Thus, any increase in the yield of the bond will not give any impact to the price of gold. The stability of good price is crucial to ensure resilient microeconomic condition for a country. There is chance of an economy to fall into recession due to the commodity shock. And the last subtopic is a crude oil. So crude oil has a fairly significant direct and indirect cost input to the production of gold. Higher gold price will translate into a gold price. It's argued that the price of gold and oil are related. While there is no apparent intuitive connection between what happened with oil and what happened with gold. A study conducted by Shafi and Topol 2010 found that crude oil price is significantly related to gold price. The outcome is also supported by Thurman 2011, who found the oil price is significantly related to gold and determined the factor that affect a gold price. So, in USD market, oil price is seen to be significant to gold price as oil price is taken as the related variable which explain most of significant factor financing the gold value. Said 2014 and Sindhu 2013 also found a similar result from the study they conducted, where the result had shown that oil price influenced gold price. Hence, this further strengthens the idea that oil price is one of the factors that is significant to gold price. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. I want to continue about factor affecting the price of gold in Malaysia about global economy. Economy instability will also cause investors to try to earn their money. Gold is one of the most popular places to invest and wait for the economic downturn. This also caused the selling price of gold to increase due to rising demand. Increase in demand is not limited to time of economic downturn. This is mainly due to people who have more income and can spend more. The interest rate set by the central bank is often an indicator of the price of gold. Lower price means that gold prices are expected to rise, and higher prices are often followed by lower prices. Continue about summary reason why the gold price are up. First, gold price rise when people are unsure about the government or financial markets. Second, gold is viewed as a safe haven at time of economic. Gold is bought when investors fear that the value of the currency will decline. When the dollar weakens, gold strengthens. When the central banks are going through a deficit, investors buy tangible assets like gold to protect their wealth. As interest rates decrease, gold rates increase as the opportunity cost to hold gold is lower when compared to their investment. When the cost of production is high, miners sell gold for more money so that they can preserve their profits. This reflects when the gold is sold in the market. Okay, the conclusion is gold will be the preferred alternative when the economy hit the bottom and interest rate is cut. The investor use the commodity as a lot of value to prepare for the next uptrend in economic condition. As the currency value appreciate, the price of gold will plummet. As a matter of implication, it is argued that investment in gold would be beneficial to avoid losses due to depreciation in the exchange rate. In other words, depreciation of the exchange rate which erode the purchasing power of the rise of the local against the imported goods will be neutralized by a rise in the price of gold. It ultimately protects the wealth and purchasing power of the holder. That's all. Thank you.